Hello, everyone. Again, I'm Connor Heaton, SRM's Director of AI and host of Tech Talks this afternoon, filling in for Larry Pruss, our usual host. And I'm here with Kian Sarreshteh, the co-founder and CEO of InvestFi, to talk about their platform and how they're empowering credit unions to combat deposit outflows. So first, just in brief, to kind of contextualize for everyone, could you talk a little bit about what InvestFi is, what you do, and your focus?
Yeah, so we've had an interesting journey. I know Lou, who I just said hello to, used to know us as a company called CryptoFi. So we started out as a crypto investment platform that launched back in or started back in 2021. And our initial thesis was to integrate inside of major digital banking platforms to offer a white labeled crypto exchange to credit unions. And at the time, banks too, a white labeled crypto exchange. And as I think a lot of people know, the headwinds that we faced as a crypto company were pretty significant. We had a few banking pilots actually signed up in 2022, and then the OCC and the FDIC came out with guidance that made it near impossible for banks to actually launch a crypto solution, which really cut our total addressable market in half. And so we pivoted to primarily serve credit unions, which we started doing in the middle of 2022. We were fortunate enough to launch with, or we're now live with 3 credit unions for our crypto solution. But the crypto bull run that was in full swing in 2021 didn't really persist for a lot of macro reasons, which I think a lot of people are aware of throughout 2022, 2023, and even today. And so our business model fundamentally shifted, where we were initially approaching the market as giving credit unions a new stream of non-interest income by being able to participate in the transaction fee revenue that companies like Coinbase were making, right? Because a lot of the credit union members were transferring money over to Coinbase or Crypto.com or Binance or wherever, and then the Coinbases of the world are the ones monetizing through those transaction fees. But even companies like Coinbase, I think their crypto transaction fees have cooled off. If you follow their public statements, and so we really went back to the drawing board and reevaluated where our core value was in this ecosystem, and did some analysis with some of the credit unions that we're partnered with. And if you actually compare the deposit outflows going to crypto exchanges versus going to all of the investment platforms out there that may or may not have crypto, like the E-Trades of the world, the Fidelities of the world, Robinhood, SoFi, there's a long list of them. The deposit outflows are really like 10x when you layer on securities on top of crypto. And so in the middle of 23, we were fortunate to start a conversation with a QSO then called CU Digital One, now called CU Wealth Next. And I think they were recently on the same webinar, and had conversations with them around expanding our offering and getting funding from them to be able to do it. And so we raised a round of funding from CU Wealth Next, which closed at the end of 2023, with the intention to rebrand to InvestiFi, which we have since done in February of this year, and launch a self-directed stock and ETF trading platform alongside of our crypto offering. And that's really what we've been working on throughout the course of this year. And we're really excited to be launching our first full-blown self-directed offering with a credit union just in about 2 weeks here, with Bluestone Credit Union in South Dakota. And then we're launching the week after with United Financial in Michigan. And then we're hopeful to launch with Frankenmuth Credit Union as well this year, and some other credit unions to follow. But the way we position ourselves in the market right now is we really are the only company, only wealth tech company that's actually integrated our solution with both the digital banking environment as well as with the banking cores to allow for credit union members and bank customers to be able to trade directly from their checking accounts. And I think that's really an important point to double click on, because with all of the competitors that we have on the market today, every single one of them is going to require a credit union member to transfer money over to a third party account and then buy an asset from that third party account. And then once that asset's sold, the money, the proceeds from that sale goes back into a third party account. And so when we talk about keeping deposits in house, I think the mechanism in which these trades are effectuated is incredibly important. And that's really what we solve for, is by allowing trading to happen directly from checking. When assets are sold, they go back into the ecosystem of the FI. And when dividends are paid, for example, those dividends also directly go back into the checking account of the credit union member, not some third party investment account. So that's really what, who we are, where we came from, where we're at. And then towards the tail end of this call, we're also like an opportunity, if we have time, to talk about a robo solution, which has some very unique differentiators that we're coming to market with in Q1. So yeah, that's the
Yeah.
I think the overview, if that's helpful.
Yeah, absolutely is. Congrats on the rebrand, relaunch, and sort of new pilot clients coming up. Sounds like it's a very exciting time. Definitely do want to save time to talk about the Robo solution. As our head of AI, near and dear to my heart, I've been using Robo Investors for, man, I don't know, probably more than a decade now, from when Betterment Wealthfront kind of first kicked off. Um, so yeah, excited to hear more about that. But I guess just first, if anyone has questions, feel free to drop them in the chat. I'll be checking back periodically and can ask for them, or we can kind of pick them off as we go. If folks have any confusion about InvestFi or what they're doing. Just a couple things I was curious about, and then I believe you had some research on kind of where deposit outflows were going to, that might be of interest to the audience. So that's something I'd like to look into if possible. Um, but just curious about the strategic shift in some of the SEC regulations that made the banking sector no longer viable for that sort of crypto exchange product. The crypto exchanges themselves, like the Coinbases of the world and the brokerage platforms like your Robinhoods that trade in crypto, uh, do you think they're in danger of running up against those same regulations when they try to expand further into retail banking? Because that's a trend that I feel like we're seeing increasingly, is these fintechs trying to take share in the retail banking space, offering credit cards, offering savings accounts with high yields. And so, as the line between fintech and bank blurs increasingly, yeah, have you heard any rumblings of regulatory challenge to that?
I think, yeah, I mean, I think there's a lot of concern that I've observed in the news around third-party fintechs, spinning up like neobank offerings now. The the prominent fintechs out there that are what I would consider the prominent ones, like the Robinhoods of the world, the SoFis of the world. I think they have built fairly resilient platforms from a regulatory standpoint to be able to continue with the offerings that they have. And I think that's really where, and I'll share some of that data here um, very shortly. But when we look at the outflows and going to the Robinhoods and the SoFis and the Fidelities, I mean, those I think are some of the top three platforms. And I don't think those retail banking solutions are going anywhere. I think they're only going to get more expanded. Like obviously, SoFi can do lending, and Robinhood's not doing lending yet, but that's something that I think that Robinhood and the others that have used investing as a hook to be able to grow their user base, to grow their assets under custody or management base, are looking for ways to further monetize now. And the banking products are really the most clear path to do so. And like last year in 2023, Robinhood's interest income surpassed their transaction fee revenue, right? And they did so because they grew from 0 to 22 million users over the course of 7 years before they launched their checking account and their savings account and their debit card products. And since then, they've continued to iterate on that. And so, yeah, I think that's a trend that's secular, and that's something that I think we're encouraged, at least by credit unions, are starting to pay more attention to. So,
yeah, and that's a conversation that we have with our clients pretty often is, are your real competitors like the credit union or the bank down the road, or is it fintechs? Is it the tech giants who are increasingly expanding into the space? So I think it is really important to have eyes on that. And then the sort of companion question I had there was, is there an expectation of regulation from the NCUA that would be comparable in terms of restricting credit unions from having crypto as part of an investment platform? Obviously, you're diversified now and have a full set of equities, so it's less of a critical risk. But curious if there's an expectation that the NCUA follows suit, or that they've put out a statement to the contrary that they're fine with credit unions having crypto exchanges attached to their offerings.
So, so far, we've been encouraged, I think, by the NCUA's stance on crypto. I think Kyle Houtman has been an outspoken advocate for crypto largely. The NCUA hosted a crypto roundtable at GAC earlier this year. And I think there's other companies that a lot of people here are probably familiar with that are making more headway in the crypto space now than we are, in particular with credit unions. And so, I think credit unions are very uniquely positioned, because when you zoom out and think about the types of entities that can be confident that the regulators are going to continue to support crypto, I think the NCUA is probably the one that at least I would have the most confidence in. Like if I'm a neobank, or anyone that's regulated by the OCC or the FDIC, or caused a lot of problems for crypto companies before, like Vast Bank, I think was the last bank that had a crypto offering in Tulsa that just recently, or maybe not that recently, but got shut down within the last year. And so the credit unions have a really unique opportunity to be a institution, one of the only types of institutions that have regulatory support to be able to offer crypto, securities, banking products, everything that the consumers ultimately are asking for. So, and
Yeah,
I'm
gotcha.
pulling up some of these data points right now, and this is something that we're going to start to publish more publicly here soon. Apologies, I'm grabbing
No worries. There's actually a
these.
question in chat I want to get to before we dive into the data.
Sure.
Question is, are the monthly and annual brokerage statements available in the CU's digital banking solution alongside the checking and savings monthly statement and credit card statements? So in terms of like the brokerage that's attached, is it all part of the same statement solution, like all sent out together?
Yep.
Something that you handle?
Great question. Great question. Love that we're getting the weeds already. So it's out of the box. It's we do have statements that are natively available, but only through our application. Our application is natively embedded inside of a lot of different digital banking providers, which I can talk about as well. So as it stands today, it would be separate from the core online banking statements. With all that said, there is a credit union right now, fairly large credit union right now, that we're actually close to signing up. And one of the features that they requested is exactly what that question is, to make the statements available within online banking where the rest of their statements are, the rest of their banking statements are. And so, the challenge there is that there's a lot of different vendors that provide those statement services. And so, first step for us was integrating with the digital banking providers so we could align the UI. Second step was integrating with the banking core so we can do money movement and access PII and whatnot for onboarding a member. And then, third step is looking at some of these other types of integrations that can add more value. And that's something that we're going to continue to do more over time. So we should have our first credit union that we actually do that with, where their regular monthly banking statements, credit card statements will be in the same place as their investment statements, and that should be productionalized, I would say, by end of Q1 of this coming year, 2025.
That's great. That's great. And then you mentioned that the UI integration was one of the early priorities. So when this is the follow-up question, when someone goes into digital banking to look at the balances, do they see equity and bond holdings alongside money market and share accounts? So like the integration you have with those online banking or mobile banking providers, does that allow for showing their holdings there in parallel?
Yeah, so it depends on the digital banking provider, and I think that's one of the key learnings that I've taken away over the last few years is they're all different. They all have different capabilities out of the box, and so we're integrated with 5 of them right now. 2 out of the 5 have that capability out of the box, so it does appear like a new account type that sits alongside their money market accounts, checking accounts, everything else. The other 3 do not have that capability out of the box, which is more of a digital banking limitation than our own. But I think the good news is that because investing through your credit union or your bank is a hot topic right now, that some of these digital banking providers are starting to get pressured by the FIs to actually enable this type of functionality. And so, there's one in particular right now where we're partnered with because of NDAs, I can't name specific names, but we're partnered with a systems integrator for one of the major digital banking providers today that does not have that functionality out of the box, but we're going to be the first fintech on their platform that actually is able to turn that on. And so we view that as a really important feature because that's really what the experience is on Robinhood today. You see your checking account balance right next to how much money you have invested. And I think, that is important for users to be able to have a clean snapshot of their whole financial picture on the same dashboard. So yeah, we're trying to build towards that on all the platforms, but unfortunately not available out of the box on all of them.
Gotcha. Yeah, I mean, I'm sure everyone on the call is familiar with how difficult it can be to integrate with vendors, especially when they don't necessarily have an incentive to do so. So thank you. That's helpful. Okay, that's all of the questions we have in chat for now, but I'll continue checking back. So yeah, did you pull the data up?
Yep. So we've got 5 different charts here, and I'll pull them up one by one. It's interesting. I think we also might be the first wealth tech company working with credit unions. That's actually we recently paid for our own study. So we partnered with a marketing research firm, and we surveyed about 6,000 Americans across the U.S. and asked them some questions around investing. Hang on. So
solid sample size, more than you usually see in this sort of industry study.
Exactly. So NYDIG only did they did a survey previously on something similar, but they only surveyed 2,000 people. So we did 300% more than them. All right. We need to clean this up a little bit and make it look a little prettier still. So this is actually the first public forum we're sharing this in, and it's a little difficult to digest because of how many different line items we have on here. But one of the things we asked was, who else do you currently use for investing? And when you actually look at this, and this is folks that I have not done a deep analysis on myself on this yet. This actually is hot off the press as of 2 days ago. So, but you can see, we've got this one here is Cash App. And Cash App, of course, is used for things other than investing, but it's still a pretty big portion of users that were surveyed that actually use Cash App today, which has investing natively integrated into it. I think the scarier ones to pay attention to are Fidelity, Robinhood. This is Coinbase here in gray. You have SoFi here in pink. And all of those companies have banking products in addition to the investment products that they have. Once we get all of this cleaned up in a little bit of better format, I'll share this with you, Connor, and then you can circulate it to all the attendees on here. So
Sure, yeah.
we'll sort of keep this.
The market looks kind of surprisingly pluralistic in terms of the distribution of apps that people are using.
Yep, absolutely. And then this is an interesting one as well. It's like, all right, so you're transferring money over to these third parties to invest, but once you're there to invest, like what else are you doing with them? And more than half, have a debit card, and there's a lot of engagement across these other typical, banking products that are out there. In particular, like loans. Like if you look at like the lending, this is obviously by age range, but I mean, almost half in most age ranges or more, 55 and over, are doing lending. Or I'm sorry, I'm having a tough time reading my own charts here. I guess that's a checking account. So the narrative that I was spinning is not quite as accurate, but there are a lot of people still doing lending with these third parties. And then bill pay is another one that I think most people commonly use their primary financial institution for. And so point here is there's a lot of engagement with traditional banking products on these third-party platforms. And then this chart's also fairly interesting, looking at which actual asset classes people are investing in. And this is really, I think, supporting our thesis. There is a lot of interest still in folks that own crypto. I forget the most recent data point with crypto, but I think it's now close to like 30% of Americans own crypto. Someone on this call can probably fact check me on that, but still a good amount of interest in crypto. But as you scale up into the older age ranges, which is a big portion of a lot of the credit unions, at least, they are investing in stocks at a pretty high clip. And it's no secret that most community banks and credit unions today do not have a mechanism to enable stock trading. Right. And then mutual funds close behind that. ETFs is still a pretty significant number as well. And then real estate, another line item here that I know our friends at CU Wealth Next are also driving a solution around. And so that's really the thesis here, right, is to be able to have a one-stop shop at a bank or credit union, to have all the banking services that they're accustomed to. And this is the other thing that I always like to emphasize too, is like, banks and credit unions have these generational relationships a lot of time with their account holder base. And because they have those relationships, they have inherent trust that's built in that companies like Coinbase and Robinhood just don't have. Like my dad, for example, refuses to ever transfer money to Coinbase because he just doesn't trust doing so with Plaid. And so if my dad had the ability to buy crypto or a stock even through a credit union right from his checking account, there's going to be a lot more engagement with that, which we're encouraged by. So if anyone wants me to slow down with the end of this, I'm more than happy to. Just let me know.
Yeah, what was interesting to me on that last one was that the 18 to 24 age bracket actually looks like it has the highest rate of investment in both real estate and alternatives, which was surprising to me, right? I wonder if that's a participation in REITs and like financial vehicles or if it's actual ownership or co-ownership of real estate, because that's pretty high percentage. Looks like 30 some percent of 18 through 24, which is not what I might have expected. And then the alternatives, I think, high crypto, high alternatives is interesting, right? It suggests maybe less trust in traditional asset classes, and higher interest in diversification.
Yep, completely agree. And whenever we go back and clean this up, I think that's an important point to make clear. I'm actually not sure off the top of my head if that does, incorporate the REITs within real estate or not. So yeah, I'll double check on that and I'll make that clear whenever I do end up circulating this. So, okay. You know what? This is the only other chart here that makes the previous chart that I showed on the similar topic just a little more clear. So these are the products that in aggregate all the age groups are actually participating in. So debit card obviously being the highest. So if you transfer money over to Robinhood or Coinbase or Fidelity, you're getting a debit card too, checking account out of the box. And the direct deposit line item is one that I think should at least raise some eyebrows with the credit unions and banks, because if the credit union is not being used as the primary institution that's the recipient of the direct deposit, they're likely missing out on a lot of opportunities to engage those members with other products that we see on here too, right? And so interesting data, and I think this is something that's continuing to evolve, and we're going to continue to try and get more participation from the credit unions that we work with to monitor this data. Just another quick off the cuff data point. One of the credit unions that we work with, they're about $1 billion in assets, and they actually ran a report where last month in August, they had a little over $2.6 million flow out to all of these third-party investment platforms. And that's sort of like the range that we see roughly. And if you game that out, the math is about 3% of their, if that's consistent over every month, the math is about 3% of their total asset size in a
Wow.
year. And so, and there's others that we've done the study with where it's closer to like 5% in a year. And so, game that out over a few years, they're losing huge portions of their assets. And I think that's really part of the reason why we're seeing more consolidation with credit unions and community banks too. So,
yeah, absolutely. The other thing that's interesting on that graph is just that the direct deposit's higher than checking accounts. So it's kind of a question of like, are people direct depositing directly into investment platforms or like Cash App or whatever non-checking account, but still payment solution that they're using? I think that raises some interesting questions and kind of how younger generations are banking and how they're approaching their finances.
Absolutely.
Thanks for
any
sharing
question?
the data. It's great to get this so hot off the presses. Sorry, you were saying.
Absolutely. No, I don't know if there was any questions. I'm happy to answer any more. I can jump into the demo, whatever makes sense.
Yeah, well, we'll take a brief pause here. Any questions from the group on this data or on the InvestFi platform? Anything else we've talked about? I'll give it just enough time to make people uncomfortable, because that's usually the amount of time it takes for someone to get up the bravery to unmute. And then we can move on into the demo or just talking more broadly about the solution. All right. Hopefully that was enough sitting uncomfortably. If you do have a question you didn't ask, feel free to drop it in chat and we'll get to it. Great. So Kian, do you want to move to the demo?
Yep. Absolutely. So the goal for us here, and we went through a very exhaustive, extensive exercise with our legal counsel, who is the same legal counsel that Robinhood and SoFi use coincidentally. And the goal is to have a balance between separation of crypto between the other asset classes, as well as providing for a unified experience. So that's what we're really doing here. And when you go through this, we first ask the account holder what types of assets they're interested in investing in. And we don't force crypto on anyone. If they don't want to do crypto, they can toggle this off and they won't see crypto in the experience. Same with securities. We don't force people to do securities, but assuming you want both, you click, let's get started. And then there is, a set of terms and conditions. Generally speaking, we have our platform terms and conditions with InvestiFi here. And then there is a set of terms and conditions with the cryptocurrency custodian. And then there is 3 different sets of terms and conditions for securities. This top one here is with our securities custodian and our clearing broker. This one here is with our introducing broker, CDS. And then we also are inserting the RIA that we wholly own, InvestiFi, which is part of the Robo solution that's going to be forthcoming. And so in anticipation of the Robo solution, after the core terms are agreed to, and we do, by the way, integrate with the banking cores. And so the names here actually will be already populated when this is live in production with NFI. But we have people answer these basic risk-based questionnaires. And then based on their answers here is going to be the pretext to the robo portfolios that will be forthcoming at the end of Q1, but we are gathering all this information on the front end as well for regulatory purposes. And then we ask them their risk tolerance. And then this, again, this contact information is contact information that we do pull from the banking core. Once onboarding is complete, within seconds, I can actually go in and start trading. So let's say I want to buy some Netflix. You can see some information about the historical price chart with Netflix, etc. And then, the main difference with our platform and other platforms is, like I mentioned early on, you can actually trade directly from your checking accounts. Due to something called Reg E, we will not allow trading to happen from savings accounts, but whatever checking accounts the FI wants to make available for trading, we can enable that. And then whatever checking accounts the FI does not want to make available for trading, we can also disable that too. So if there's like a beginner or starter checking account, for example, we can disable that, which is why you see that grayed out here. But let's say I want to buy $500 worth of Netflix. Also worth noting too, like we don't let anyone overdraft to actually buy an asset. And then the FI during implementation can set what these maximums or minimums would be. For stock trading, the minimum trade is $1. So fractional stock trading is very much so available. And then when I come here to confirm purchase, what we do with our core integrations is we're moving $500 from my checking account over to the FI's GL. And then in parallel, we're routing this order through to the clearing broker, who's also custodying this security. So that's the buy side. And now back up, refresh the page here. And we can see I own about $500 worth of Netflix. If I want to go back now, I want to be able to sell Netflix. What's going to happen here is, let's say I want to sell $200 worth. I can select what checking account I want to receive this money back into. And this is the really powerful point here that really protects deposits from flowing out to third-party platforms. One of the things that we're waiting for the data back from our research partner on is when there's actually assets sold and the money goes back to that third-party platform, how much of that money actually comes back to the FI, right? And usually what we see happening is when a user has money that they just keep in a third-party brokerage account, they just let it sit there, whether to be to wait to buy a new asset or to take advantage of those other accounts that they can get with Robinhood, right? And so once money leaves, it usually doesn't come back. And with our solution, there is no Plaid integration required, which we also view as a security risk to have a Plaid instance embedded inside of an online banking environment for the purposes of moving money to in and out of a third-party investment account. So with us, all the money stays inside the FI's walls. And when I click, sell order here, what's going to happen is we're going to have a pending credit to my checking account. And then once these trades settle at the end of the trading day, the clearing broker is going to send $200 back to the credit union's GL. And as soon as that money is received by the credit union, the money is transferred back into my checking account, which is usually about a one business um, hold time. So that is, oh, sorry, my connection cut out there. I don't know if, where I lost you all, but
You started cutting out a little bit talking about how the transactions were clearing, but so it sounds like the orders clear end of day, so it's all batched end of day, the way that I think Robinhood used to work, but may have shifted to more real time now. Um, and then as far as like the money actually being transferred next day, typically.
yep, exactly. So, and how it works, so at market close, two things happen. There has to be gross bidirectional settlements. So we will trigger a auto ACH debit for all the buy orders in a trading period. So let's just say I'm the only person that traded in today's trading period. Then we would do an auto ACH debit for $500 from the credit union's GL. The credit union already got that $500 from the member, by the way. And then in parallel, we're sending back a same day ACH for this $200, if that makes sense.
Gotcha. That's helpful. And then I saw in the early questionnaire that there were options for more experienced or confident investors. Do you have like options trading or anything like that in the platform, or is that kind of like roadmap or just
Yeah, so no, we do not have that today. Out of the box today is stocks, ETFs, and crypto. And then, next on our roadmap is Robo. And I can actually, I can jump into our Robo experience as well, which I do actually have a short deck for. So we're going to do what we have now. It's self-directed stocks, ETFs, crypto. Next big thing on our roadmap is Robo, which is coming by the end of Q1. And then after that, we'll be looking at layering in other asset classes like options. So
great?
that's
Yeah, quick question from the chat before you move into robo investing. Do you
sure.
leverage now or TCH for settlement if the FI is a participant?
We can't actually, yes. So that's longer term for us. We're actually hoping to do more settlements on FedNow, but we just in our early research, we just did not find as many FIs that actually were that we were working with, at least that had FedNow enabled. So, but yeah, we're able to do that for an FI today if they wanted to.
That's great. Yeah, it seems like trying to remember what I read about this recently, that there was kind of a quiet for a while and then a sudden adoption spike. So it's perhaps picking up, but it's good that you have that optionality.
Absolutely. We can do RTP as well for the record, but yeah. So, other questions?
Nothing from the
Jump into
chat yet.
Robo.
So yeah,
All
go
right.
ahead and move over.
Cool. So, and again, this is still just in our um, design mode right now. Here, I can let me go into presentation mode though. Here, all right. So, this just high level is what we're going to be building here, and it's probably not too different from the other Robo portfolio or Robo products that some of you have seen. I know there's been a couple of them that have presented on the same webinar. So I'm not going to spend too much time talking about this because it's pretty vanilla in terms of the risk questionnaires and then the portfolios that we're ultimately going to be recommending to the end users based on those risk questionnaires. But we really, self-directed was our first product. Robo is our second product. I think most of our competitors did Robo as a first product and then are thinking about doing self-directed as a second product. The reason we did self-directed as a first product is because a lot of the data points that I previously was mentioning, like the big one that sticks out is Robinhood, huge user growth over a 7-year period. And they've done a great job of being able to take deposits away from community banks and credit unions just with having a self-directed option. But by us going to market second on the Robo side, we're doing things differently than a lot of our competitors as well. So the two main differentiators that we have that I do want to call out is with these robo portfolios. For those of you that aren't overly familiar with how these things work, there is a risk questionnaire on the front end. So once that risk questionnaire is filled out, they're determined to be in one of several different risk categories, and based on that risk category, they're recommended a portfolio. And that portfolio they're recommended is going to be composed of various assets. Usually, there's going to be at least some component of a cash equivalent, and the more conservative the investor is, the higher the percentage of that cash equivalent. And then there's going to be some ETFs. Again, for more conservative investors, those ETFs are likely going to be more low-risk ETFs that are made up more so of bonds and fixed income type products. And then as you scale up the risk spectrum into more of an aggressive investor, there's going to be more stocks and growth equities that are made up of those portfolios. The way we're differentiating is because there usually is that cash component or that cash equivalent component as part of these portfolios, is actually leveraging the FI's money market accounts as that cash equivalent. So instead of shipping those deposits to a third party, which I'm pretty sure is what all of our competitors do, our whole goal, just like on the self-directed side, is to keep deposits in house. We're excited to do the same thing with these robo portfolios. And then taking it a step further, we really don't want to be viewed as competitive. We don't really we don't want to compete with the in-branch RIAs that a lot of the FIs have. And so to avoid conflict there, we are giving 100% of our AUM fees away, which we can share with the RIA too if the FI wants, or this becomes a new stream of non-interest income for the FI. So we don't want to compete with the FI or their RIA in any way. We view ourselves as a solutions provider for this experience, and we have everything available, all of these risk questionnaires and portfolios out of the box, but we monetize purely on a per user per month fee basis. And then further, there is some credit unions out there that are interested in really taking that synergy with their in-branch RIA a step further. And what we're doing right now with a couple of those credit unions is working through a process to actually embed the same risk questionnaires their in-branch RIAs have, and cloning the recommended portfolios from their in-branch RIAs into the digital experience. There's a credit union that we recently talked to that said their break-even point to have a human relationship with an advisor is about $25K. And I think that's different, based on who the FI is, but using that as like a rough benchmark, if you don't have $25,000 to start a relationship with an advisor, then you're really out of luck. And our thesis here at InvestFi, and our largest investors' thesis as well with C Wealth Next, is really to democratize investing and make this available to anybody that has as little as $1 to be able to participate in. And then, with that, we view our digital solution that is available for investors of any dollar amount as a graduation type strategy for the in-branch RIA. And so, if you're setting up recurring purchases to be made every time you get paid, even if you're doing like $100 every paycheck over the course of a few years, which is the big benefit that especially credit unions have, right? They have these generational relationships with their member base, and so they might start off as someone in high school doesn't have any money, then they go to college and have a tiny bit of money, and then they get their first professional job, still not that much money, but by the time they're 30 and 40 years old, they have a lot more money. And if they've been contributing to these robo portfolios, the in-branch RIA can track that through our platforms. We actually have a tool to give to the FI, to the RIA, if they want visibility into it, member balances for robo. And once they get closer to that $25,000 threshold, if that RIA wants to reach out and start a human relationship with them, they absolutely can. And so those are some of the ways that we're going about positioning our product, and we're getting some pretty positive feedback in the market because of it. So I don't know. Did that make sense to you, Connor?
Yeah, absolutely. And that's great to see. I haven't seen any other robo investment solutions where uh, they do give away all of the assets under management fees. There's always some fee percentage associated with it. So like that's I think a really solid differentiator. Um, and then the other, as far as like the cash allocation, having that stay in house seems really helpful. I'm curious because I remember back from when I was researching robo-advisors, there was no way to completely eliminate the cash allocation, because in part that was how some of the money gets made, right? So I'm curious, is that the same case here, where like there's always some cash minimum, or is that configurable if your clients want to change that up?
Yeah, the most aggressive investors we still, I think, have, I think it's 5% of the portfolio be a cash equivalent. But I think where a lot of people get frustrated too is a lot of times, like you said, Connor, those cash components to those portfolios oftentimes don't even yield like really any interest, right? And so I think the good thing about using a money market account, especially for a credit union who typically will have more favorable rates, they actually will at least benefit to some degree, maybe not as aggressive as their risk tolerance would prefer, but there at least will be some interesting income coming through those portfolios, through those cash equivalents. So yeah, there always will be a small component of it, but it depends on the risk profile. So
Right. Gotcha. And then I notice you have automatic rebalancing for goals. Is there also tax loss harvesting baked in?
there is. So that's something that we're currently thinking through a strategy on, which I'll follow up with you with some details on that, Connor, because that currently those are active conversations being had internally right now, how we're going to go about doing that. So yeah.
Sure. Yeah. No need to put out a statement ahead of figuring that out. But yeah, good to know that it's kind of in the works. But yeah, it seems like a really solid way to do it, and offering an in-house robo-advisor to minimize the array of external accounts that folks increasingly have. Because I agree with the thesis of a lot of different banks and startups that people don't really want to have 5 or 10 different accounts for different things between their credit cards, brokerages, savings, loans, checking, so on and so forth. But the current nature of the environment with different features and uh, encourages multiple accounts. So giving FIs the ability to really compete and centralize those capabilities in one place, I think does have a lot of value in the marketplace. Um, so I think there's a strong value proposition here for sure. Um, Another question from the chat, is the robo rebalancing AI based, or what's the methodology or frequency for doing the rebalancing?
Yeah, we rebalance quarterly. So we're not the company that's going to say we're doing AI just to do AI. There is an algorithm that does the rebalancing, but I wouldn't necessarily consider it to be AI. So, but it is a time-based quarterly rebalancing.
Got it. Yeah, and that's just a brief, interesting thing to call out. I don't know how universal this is, but there's at least one study I saw recently saying that there was kind of backlash against AI washing, and AI washing is where people claim that the product uses AI, but maybe it doesn't, or it's like in a very minor, basic way as a means of selling the product. But the study was interestingly showing some backlash against that, of consumers being less interested in products that aggressively advertise their use of AI. So, I think there's something of a media saturation, maybe, and certainly as there's more conversation and controversy about AI risk, it could be that AI is a bit of a dirty word for a while, at least in certain sectors. So, something to keep in mind, as I imagine most of us are examining or pursuing different forms of AI adoption just for the efficiency potential. That you should exercise some caution, maybe do a bit of research in how you message, because that may not be the same sort of benefit that it was even just like a year ago.
Absolutely. Yeah, we considered too the drift methodology to do rebalancing on a more frequent basis, but and that was something that we did actually look at some AI with, but there was some concern from the principal at our RIA around how significant the um, trade volume it would increase through the RIA, which sometimes raises regulator eyebrows at the SEC, which is ultimately why we landed on the path to do a more vanilla quarterly rebalancing. So,
Gotcha. Yeah, good to know that it's secure and planned out in that respect. Great. Any other questions from the chat? While folks are thinking, Kian, is there anything else you wanted to call attention to, be it new features coming down the pipe or other data points on why there's value here and what a FI should be considering?
no, I mean, I think those are everything I went over are the two things that I'll just restate that we're passionate about is keeping deposits in house by allowing trading from checking from a self-directed standpoint, and then same in the same vein, keeping the eyes financial instruments, their money market accounts as part of the robo portfolio composition, and then allowing the FI to be the sole beneficiary of the AUM fees. So yeah, that's what we're excited about. And there's any FI, so I'll just quickly announce the digital bank providers that we're integrated with today. So Q2, Alchemy, NCR, Voyix, who just got bought again, so I don't even know what to call them these days. But CU Answers, and then Jack Henry Bano. And we've got a couple more coming early next year. So if you're on one of those digital banking providers, we can usually spin up a solution for you pretty quickly out of the box.
Great. Yeah, that list covers certainly most of the FIs I talk to as far as what they're using. So that's a pretty solid footprint for how relatively recent the equities platform is. Great. Well, if there's no other questions, then I think we can probably go ahead and wrap up. And if there's a question that occurs to you later, feel free to reach out to me or to Larry, and we'll go ahead and route the questions. But yeah, thanks so much for taking the time to present on the solution and answer all the questions today.
Absolutely. Appreciate you having me. Thanks, Connor.
Thank you. And